So what I wanted to point out here real quickly is stepping down to an intraday time frame from a daily. Before we get to more of the tactical, 30-minute or 15-minute entry level, which sort of sheds light on our strategy and maybe a little more granular look at this one set of candles over here. That will tell us, oh, should we adjust our strategy and things like that. But from more of a top level, you could see this tells us a lot from an intraday tactical pre-triggered level. It's sort of like here we are, we went from a daily telling us where to go and a weekly telling us which direction to telling us when we should get in, and then our next time level down will tell us exactly when to get in specifically from an entry point of view. But you could see that our bias that's driving this currency up, and why I believe we're going to eventually channel up or go up through this 1.32 level, which is ultimately the line in the sand that's going to probably give us a lot of problems. We have a confluence here of an upward sloping trend line along with a psychological resistance level of 1.32, and we got overbought RSI stochastic. So I think it's inevitable that we see a problem here with it possibly bouncing down either here or earlier and before going up again. But that just tells us that we could either which I'll talk about in the next time frame down when we get to our tactical approach, but we could either have buy limits below at certain support levels, or we could do an order actually above 1.32, relying on the steam of the market buying in once they see it pierce that strong resistance level that has a confluence of indicators showing that it is a strong resistance level. You can see we have a channel here, and this channel is an arbitrary. It actually connects, and it's never an exact science, but you try to connect the top and the bottom of the upward sloping trend lines, and it gives a little bit of a channel showing you where it's going. So boom, boom, boom. If it comes up and bounces off the 1.32, it would not be surprising if it comes back down and bounces. But you got to realize as price is bouncing up and down, it's moving forward. So as it gets up here, it might go sideways a little, bounce down, and then by the time it gets over here, this trend line may actually cross above this 23%. So a retracement might only hit 23 or some 38%. This just gives you a view showing, okay, I expect it to go up, have some trouble here, bounce back down, but where am I going to get to enter here? That's a more refined swing view, or we looked at the trend at a time frame above at the daily, and now we look at more of the swing. We go from a trend to a swing to an entry. And now one last thing I wanted to point out is what makes this pair go up is the US dollar going up and or the Canadian dollar going down. And what we expect is the US dollar to continue or break out of this sideways triangle pattern after possibly going down a little more to continue its trend upwards. Stochastics are in oversold territory, so that makes sense. We don't expect it to keep plummeting down and oversold. Though it has pierced this bottom upward sloping trend line, it's not officially closed below it. Therefore, it's not a technical break in my opinion. I believe it could drop below a little bit, but with this oversold stochastics, I believe a little bit of a drop here is ultimately going to be synonymous with hitting that 1.32 level before and bouncing down before resuming upwards. I just don't think it's going to be short-lived, in my opinion. Also here you can see that we have upward sloping technical divergence. We want oil to drop if we want the USD CAD pair to continue going up, but in this case we have technical divergence both on a longer term and on the shorter term on the 4-hour time frame, which indicates that the underlying trend is increasing from a oscillator or momentum point of view, and price is going down on no fundamental downstream reason. So it should pop up at least temporarily. That's going to put some downward pressure on our USD CAD pair, in my opinion. Though this is not pure oil, this is some kind of index like or path fund or some sort of ETF. So it's not one for one, but it shows you that we should expect some downward. Upward pressure on oil, which is upward pressure on the CAD, which is downward pressure on the USD CAD pair, which goes hand in hand with our resistance level giving us trouble 1.32, which in my opinion also should be short-lived. And now we jump down to lower time frames. Thank you.